So this is a pretty long problem, but it's going to give you some journal entries that again, you should be able to find these in the book, but I like to do them as well and kind of talk about them as we go along. And so in this problem, we have an outdoor amphitheater and concession stand at the city park, and it is going to be financed by a $3.5 million bond issue, and then supplemented by a $500,000 general fund transfer. Okay, again, terminology should be familiar to you at this point. We have several transactions, and we're going to prepare the journal entries for the Park Building Capital Projects Fund. Okay, so that's what we're working on first. And I don't know how far we'll get into this, but again, just want to show you how these journal entries work. So first of all, the general fund has transferred $500,000 in. So we have cash received, $500,000. That one's pretty straightforward. And we have other financing resources. We've seen this journal entry before. And this is an interfund transfer in. Let's go ahead and make these a little bit. No, don't want to do that. Just kidding. Okay, let me get started here. We'll go a little bit faster now. Okay, then the next thing that happens is we signed a contract with a construction company for a major part of the project with a bid of $2.7 million. So when we sign a contract, we have an encumbrances, and then we have encumbrances outstanding. So we've signed a contract for $2.7 million. That's the amount of the contract. And because we've signed, the money has to be encumbered. Okay, then we had a preliminary planning and engineering cost of $69,000, which were vouchered to the Great Pacific Engineering Company. So we have construction expenditures, $69,000, and those were vouchered out, so vouchers payable, $69,000. Okay, then we have a payable recorded for an $18,500 billing from water and sewer because they had to extend our water pipes. So even though that's still part of the city, it's still a construction expenditure. And that one was $18,500, and we're going to call this due to other funds because it is interfund, but it's not a transfer yet. It's just due to. Okay, then we have an invoice in the amount of $1 million that was received from Reston for progress to date. Now remember, we encumbered that money, so we've got to take that out of encumbrances outstanding, the $1 million. We have to show that as a construction expenditure, $1 million, and then we take it out of encumbrances. And I know I spelled encumbrances wrong there just a second ago. And then we show that as contracts payable. Then the bonds were issued at par. So because they were at par, we got the $3.5 million. So cash came in, and we have other financing sources, proceeds of bond. $3.5 million. Okay, and then the amount billed by the contractor, which we recorded earlier, was paid less of 5% that was retained. And so the contracts payable was taken care of, so we can reverse that or decrease that payable $1 million because that's what we recorded it at right here. And then we had cash. Now 5% of that we did not pay, we retained. And so that $50,000 is called contracts payable, retained percentage, and that'll show up on our financial statements as it should. Okay, and then we had temporary investments were purchased at a cost of $1.8 million. So we made some investments. And we're still sitting in this capital projects fund. Keep that in mind, because we purchased those, cash goes down. And hopefully we're going to make some money on those later. And then finally, the closing entries were prepared at the year end, assuming that 2.5 of the encumbrances outstanding will be paid from the bond proceeds and therefore considered restricted resources. Let me make a note of that over here. 2.5 million of the encumbrances outstanding will be paid from bond proceeds. And because of that, these are restricted resources. Okay, so now we're going to do our closing entries. So we are going to close out other financing sources, interfund transfers in $500,000. That one is right here. And then we've got our other financing resources, and you'll see once we finish how this all works. Proceeds of the bond, $3.5 million. That one was here, so we're decreasing that amount. And then we've got fund balance restricted, which is $2.5 million. We're given that information over here. And then we have fund balance. Actually, I'm going to go to this next one. We have construction expenditures, which is $1,087,500. And the way we find that is we're closing out our expenditures. So we've got 69 here, we've got 18.5 here, and we've got 1 million here, and that's it. And that gives us the 1,087,500. And then we have the fund balance assigned. And I kind of backed into that number. I wanted you to see how that worked. Okay, so that's what the journal entries look like for those transactions. Now, if we did, on the same problem, if we did a balance sheet, oh, I'm so far down here. If we did a balance sheet for, and I'm going to go ahead and title it so you can see what this looks like, because this is a little bit different than financial accounting. We have the Park Building Capital Projects Fund. And this is balance sheet as of year end. And so we're going to show our assets. We're going to show our liabilities and fund balances. And then those should balance. Okay, so in our assets, we're going to have our cash, and we're going to have our investments. And again, you should be able, there's not a whole lot of transactions here, so we should be able to calculate cash. 500 came in, 3.5 million came in, 950 went out, 1.8 went out, and so we know that our cash balance, if I calculate all that, is $1,250,000. Our investments are $1,800,000. We purchased those, and those are our total assets. I love accounting because it all balances. And so our total assets, just the two added together. And then we have our liabilities. So we'll do our liabilities first. And our first liabilities are vouchers payable. And again, you can go calculate your balance, but it's $69,000. You can get it from your information over here. Then we have our due to other funds, and that's $18,500. And then we have our contracts payable, and it's the retained percentage. On that sheet, and put a percentage sign right there. $50,000. That's my total liabilities. If I can sum those, and then I come down and I do my fund balances, and we have fund balance restricted, and we have our fund balance assigned, and our restricted amount was 2.5 million, and our assigned amount was 412,000. And we add those together and we come up with our total fund balance. And then we have our total liabilities and fund balance. And that's going to be these two numbers added together. And that equals our assets. And so, just like financial accounting, it all still balances. So this is our balance sheet. I mean, obviously we would want to make this pretty. We've given it a heading. And then the other thing that we can do after the balance sheet is we can do a statement of revenues and expenditures and change in fund balance for the year. And so keep in mind, this is our fund balance right here. At the beginning of the year, we had nothing. So I'm going to scoot on over a little bit and I'm going to show you what a statement of revenues, expenditures, and changes in fund balance looks like. So we have Riverside still. And we have the Park Building Capital Projects Fund. And this is our statement of revenues, expenditures, and changes in fund balance. They tried to make that as long as they could. And this is for the year ended. So just like in financial accounting, one of these statements is as of, one is for. And keep that in mind because it matters when you're reading these financial statements. And then again, we'll make this pretty. Do some merging and centering. Oops. Don't want to do that. And then just like kind of what you're used to, we're going to start out with expenditures. So we have construction expenditures. And again, we're taking this from our transactions over here. It was $1,087,500. And then we have our other financing. So this is where it gets a little bit different, sources and uses. And we have inter-fund transfers in. We have proceeds from the bond sale. And that was 500,000, and that was 3.5 million. And so we've got a total over here of 4 million. And so then we have an excess of revenues and other sources over expenditures. So that's new, the way we set this up. And so the excess would be our 4 million minus our 1,087,500, or 2,912,500. And then we have our fund balances beginning, which is 0. And then we have our fund balances ending, which is our beginning, plus or minus our change in fund balance. Okay, so that's what it looks like. Again, pretty good overview for you of the whole process for a capital projects fund. If you have any questions, let me know. Thank you.